Hi, I'm Jason Ehrlich with Fruition Capital, and I'd like to share some information about a wealth building opportunity that may not be on your radar. I'm talking about small businesses. They're the backbone of the US economy, and today over half of them are owned by baby boomers. As these owners rapidly age into retirement, we've entered a once in a generation transfer of ownership. Many of these businesses are well established, cash flowing enterprises that lack any succession plan other than a sale. In this short introduction, I'll share a bit about this opportunity, who we are at Fruition Capital and how we're capitalizing on it, and next steps if you'd like to explore investing alongside us. So let's jump in. We are currently accepting investment into Acquisition Entrepreneur Fund 2, a $20 million fund to continue doing what we've already had success doing in Fund 1, creating a diversified portfolio of established, profitable small businesses. We're projecting a 24% net IRR to investors, a 3.2 multiple on invested capital, and offering an 8% preferred return. So, why is small business an asset class you should be considering? And why is now the right time to get in? A few reasons. First, this asset class presents very strong potential for exceptional returns. We utilize an investor friendly structure with each portfolio company that includes a high preferred return and a component of common equity, and this structure bolsters the odds of high returns. Historically, over 75% of small business acquisition investments have delivered an IRR north of 20% to investors. Second, there's a relatively low probability of failure through the strategy we employ. The companies we're acquiring have generated years of consistent earnings and fail at a very low rate, around just 2.1% historically, in stark contrast to the high failure rates associated with startups. Also, a key feature in this strategy is our ability to buy right. Businesses in our target segment are too small for private equity firms, and so acquisition prices are extremely favorable. Generally, these businesses can be purchased for a 3 to 5 times multiple of EBITDA, and it doesn't take too much to grow over 5 years into the strike zone of small PE firms for a much more lucrative exit. And why now? This is a huge part of the story. As I mentioned before, over half of US small businesses are owned by baby boomers, the single largest concentration of ownership our country has ever seen, and most of them will be changing hands in the coming years. According to the Exit Planning Institute, a full 73% of small business owners plan to sell inside of the next 10 years. So, who is Fruition Capital? We know well that the people you choose to invest with are every bit as important as the asset class and strategy itself. So, I'd like to take a moment to share a bit more about our team. We're a passionate group of experienced investors and business operators who have an extensive history with this asset class. Our team has successfully acquired, operated, and exited businesses, and collectively we have over 50 years of experience in this space. We've also already executed this same strategy with our first fund. Our full bios are available in Fund 2's overview materials, but for now, I'll briefly share that I personally have over a decade of experience in alternative asset investing, have been an investment sponsor for over 8 years now, and have an extensive background in business that includes years as a management consultant, providing guidance to companies across a wide range of industries. Both Mario and Michael have successfully operated, grown, and exited businesses of their own, in addition to their other qualifications in consulting and investment banking, respectively. And Kevin still actually owns and operates a company that he acquired via his own search. David rounds out our team and has been investing in small businesses for years. And as I mentioned, since we've already executed on this same strategy in Fund 1, I'd like to give you a quick sense of what that portfolio looks like. We have 8 companies in the Fund 1 portfolio, and while they cross industries and geographies, which is very intentional from a diversification perspective, they all have one critical dynamic in common. They're all stable, old economy type businesses which are insulated from cyclicality and which provide critical services and products for their customers. You'll see some manufacturing, some business services, and some distribution, all in largely non discretionary parts of the economy. So, now that you understand a bit about this opportunity, let's talk about how we capitalize on it, our strategy and approach. While small business acquisition in and of itself is a niche space, we're focused on an even more narrow strategy. We target only B2B companies, and specifically those that have a repeat base of customers that buy from them year in and year out. They have a long history of stable performance, and they're in non cyclical, non discretionary, and not easily disruptible industries. Through the application of this criteria, we're able to identify enduringly profitable companies, those which have delivered consistent earnings across time and which have a high probability of continuing to do so into the future. And that's to say nothing of the low hanging opportunities that exist to grow and enhance sleepy businesses that the retiring owner has just been harvesting for years. While it's our strategy that unlocks the tremendous return potential available in this space, it's really our approach that empowers our investors to access this otherwise fragmented and opaque opportunity in a way that's fully passive. Our team handles all aspects of the investment life cycle, from sourcing and screening to due diligence and deal structuring, on through asset management for the life of the investment on behalf of our investors. A big part of the value that our team delivers is that we speak with literally hundreds of entrepreneurs and employ rigorous screening and due diligence criteria to narrow in on only the most attractive opportunities. And from there, we leverage our expertise and scale to negotiate and structure transactions in the most favorable way for our investors, getting terms that an individual investor just wouldn't be able to get. And lastly, we remain engaged with our portfolio companies, most often through a seat on their board, to help steer them towards the best possible outcome and mitigate our risk. Having shared all that, here's a look at the investment fundamentals for Fund 2. As mentioned earlier, we're projecting a net IRR to investors of 24% and a 3.2 times multiple on invested capital. The fund features an 8% preferred return with an 80-20 investor and sponsor split thereafter. And the 2% asset management fee, based on capital deployed, is the only fee that we charge. We've also included a look here to illustrate what the return profile looks like for a $100,000 investment. You'll note that cash distributions are slated to begin after the first year and build as our portfolio companies return invested principal and then subsequently start having exits. Fund 2 is a closed-ended fund, so after the investment period, all cash received from the portfolio companies will be distributed to investors. Here we've provided a quick look at one of the portfolio companies in Fund 2 to give you a more concrete sense of the sorts of businesses we're acquiring and how we think about those businesses. You'll see here that the Diamond and Atom machine shops are generating $3.3 million in EBITDA and were acquired for a 3.0 times multiple. These machine shops occupy a critical place in their customers' supply chains, manufacturing parts which require incredibly tight tolerances, and as such are very difficult to disintermediate. The acquiring entrepreneur, Ron Falcon, has a strong background that spans manufacturing, consulting, and private equity, and that makes him ideally suited to run this enterprise. And you'll see from our criteria fit and risk summary that this one checks almost every single one of our boxes, with the only exception around some customer concentration, which we spent a lot of time on mitigants to get comfortable with. Overall, a very strong and very representative deal for what you'll see in this fund. So, to quickly recap the key points around Fund 2, we see an enormous potential to generate outsized returns in the once-in-a-generation transfer of small business ownership that's now underway. But this opportunity is hard to access and it requires considerable time and expertise to capitalize on. Our team is deeply experienced, strongly qualified, and really passionate about opening up this asset class to our investors in a way that's fully passive. Thanks for taking a few minutes to learn more about Fruition Capital and the opportunity we're pursuing in small business acquisitions. If you'd like to review further details about this opportunity, you can access the full version of the fund's offering materials via the link above. And if you're considering investing alongside us in Fund 2, we invite you to schedule an introductory call with our team using the calendar below or the QR code on your screen. We're excited at the possibility of having you join the Fruition Capital investor family, and we'll look forward to getting introduced soon.